So doing these every couple weeks. Essentially what I'm doing here is going through the indicators and kind of the strategy that I use when I trade, how I do it, why I do it. Yeah. I've shared on the right in the chat there the last two of these I've done. One was basic trend identification and the 821 EMA. Then we went a little farther with support and resistance on the second one. All right, now we're going to use moving averages. And I'm going to show you which moving averages I use and why I use them and how I've used them in the past, et cetera, et cetera, et cetera. So I've actually got a non-crypto pair pulled up on the screen right now, and it's for good reason. This is USD CAD. What does that mean? That's United States dollar versus Canadian dollar. All right. And I'm really only showing you the chart that I've got pulled up because it was a good example, but I typically use XRP, and I'll switch to that in a moment. It was just a good example to show everyone this today, because this thing absolutely traded beautifully on a 5-minute chart. I didn't take a trade on this. I didn't expect it to happen. But more so, the point is what we're looking for. So what is a moving average? First thing to know about a moving average is it's not very complicated math. All right. It goes on the closings every single day. So if you close at $1 one day and then you close at $2 the next day, your 2-day moving average is 1.5, so forth and so on. All right. And this goes based on the closings. That's the difference in a moving average, what we're looking at right now on the screen, and a exponential moving average. This is a regular moving average, or an SMA. You'll see this verbiage used. It's kind of important. An SMA is a simple moving average, or just moving average, because that's what most people will call them. Exponential moving averages didn't come out till much, much later, and people started using exponential moving averages to try to understand more about the openings than just the closings, because they want to know what happens all in between. And that's why exponential moving averages are a little bit different, but we're going to talk about moving averages first. So the one I've got on the screen is the 50 moving average, or the 50-day moving average. And I'm on the 5-minute chart right now, so it's the 5-minute moving average. And it's the 50 moving average of the 5 minutes. I'm going to switch off this in a moment to XRP. Now, I wanted you to see this because this is a really cool example. Moving averages are essentially support and resistance that roll around through the chart. All right. As they roll around through the chart, they create points of stopping and starting. They create points of yes, no. They give us confluence on yes or no. Should I take this trade or not take this trade? Yes or no. Am I about to hit take profits? Yes or no. How much farther can this go compared to where I'm about to buy? Right? That helps you with your risk reward. Since we know that moving averages act like support and resistance, right now the price is under the 50 moving average. All right? Let's be hypothetical here and say, gosh, I think I should buy this. If we know the 50 moving average acts as resistance, and we talked about resistance in a previous session, how much room is there to that yellow line, that 50 moving average? Not very much is the answer. So it may be more beneficial and less risky to simply wait for this price to no longer be under this moving average, but to get over this moving average and then make a move. All right. That's why we use these moving averages. They help us see things that we might otherwise miss. The 50-day moving average is pretty cool because it's widely used by traders all over the world. And very simply, this is how it works. One candle closes over the 50 moving average. Great. 2 candles close over the 50 moving average. You buy. Then when do you sell? 2 candles under the 50 moving average. Just like that, over and over and over again. The really neat thing is, pro traders have taken it to a next level. They do this with leverage. So instead of buying $1 for $1, they're buying $1 for $20, right? That's 20x leverage. What they'll do is the first candle that closes over the 50 moving average, they'll go ahead and buy their position, but they'll buy half of it. All right. And then if they get a couple more candles over that 50 moving average, well, they'll buy the rest of it in. And as that price stays over that yellow line, as you see all through back here, the price stays up all the way until here. This is the first time right here where this thing kind of falls under the 50 moving average and finally stops. How would a pro trader have done this? People ask us all the time. Well, I'm a pro trader. I'll tell you. Here's how it works. I would have bought these candles right down here. I'll zoom in there for you. I'd have bought these candles right in here, and I would have set my stop loss down here somewhere. It never happened. So cool. As this moves up throughout the range and keeps going and going, every time a candle closes up, I move my stop loss up. Every time, I say not every time, a majority of the time, whenever you take a trade like this, you can move that stop loss up above where you bought. This way, even if you get stopped out, you're in the profits. All right. OCO orders are on KuCoin. If you don't know what an OCO order is, you can look up a quick YouTube video on it, but it go ahead and gives you a stop loss and take profit whenever you place your order. Right. It's pretty neat. And then you have them automatically set. You don't have to worry. Sometimes what can happen is when you place an order on an order book, if the order book is very, very, very wide, meaning, anywhere from $1 to a penny, if you go ahead and place your order there, someone may actually buy or sell your item for way off the price that you don't want. You don't want that. So just be mindful of that. But more so, as these candles move up, I'm going to move my stop loss up along the way. However much the candle goes up, that's probably how much I'll move my stop loss up. All right. So for instance, what would have been down here, I'll make this red. What would have been down here as a stop loss gets moved up every time a candle closes and closes and closes. And let's say this big green candle went up like, it's not really, it's 10%. It's not really though. I'll move this up 10%. And now that's my stop loss. If this thing comes down here and kicks my stop loss, well, fine. I bought it down here. I wrote it to there. Perfect. That's 31 pips. You guys may not understand what a pip is, but that's a percentage in point. That's a Forex term. But there's not very much movement on a Forex chart. It goes very, 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 very slowly. So you have to count all the way down to the minute numbers. But this chart did very well. I'm going to go ahead and tell you that. So inversely, same thing for a short. You would buy or sell, put your short in, 2 candles under the 50, and ride that down until it no longer does it. Even better than that, if you want to get cool with it and take way less risk, there's a long and short tool over here on the left side of your trading view. Okay, a short position obviously means you're betting against something. You grab the short position right when you would have sold. Let me get zoomed in here. We can see it. See how that dropped under the 50 moving average right there? Okay, that's where I would have shorted from, the second candle that closed right there. All right, my stop loss. Right here, if you look, it says risk-reward ratio 1. That means I have the same amount of risk as the same amount as reward. Some people like that, some people don't. It's super conservative, but I'm going to do that for the example. So my stop loss will be way up here. I don't really like that. I like to kind of go to where the previous high was, which was back here. All right, and that previous high was 135.49 or whatever. Let me zoom that down there, right about there. Now I'm a 2-to-1 risk, 2 for reward, 1 for risk. That's pretty good. That's actually real good. So I'll take this trade. As this thing starts coming down and going down and going down, hey man, I'm doing great. Uh-oh, it reverses and goes back. This is why we move our stop loss down as we go, a trailing stop loss, to help us keep good. Also, if you wanted, you can obviously zoom this down until it's back to 1-to-1 again. Right there, 1-to-1. Risk-reward ratio, 1. So, as you see, take profit would have been hit, stop loss would not have been hit. And in fact, here's the example of it going wrong, yeah? 2 candles closed over, and immediately this thing peels back. That sucks, huh? Well, part of the game. So I would set my stop loss after 2 candles under the 50, which is right there. And that's a 2-to-1 risk. I probably would have come way down here, like about that. Make that risk reward ratio 1. It didn't happen on this one. You set a stop loss, you get clipped, you move on. All right. You're going to have more winners than you will losers. That's the beautiful thing about TA. Then you have one like this that really runs, and it just runs and runs and runs. And it is yet to cross back over that 50 moving average. Excellent. I'll show you all this to explain to you that there's more to it than just the 50. All right. It's neat how the 50 moving average works. We've already talked about the 8 and the 21 EMA. This is just a 50-day moving average. Let me jump over to XRP, and we'll start our next example of more than just the 50. All right. Here's a daily chart, XRP 50-day moving average. Let me move this green thing off here. All right. This is since December. Yeah. Up we go, right? It jumped over the 50 and then played up a little bit, then back down. And then it got over the 50 and it closed the second candle right about here and went shooting up. Great. Then what? Right back down, didn't it? Bam, right back down, stuck, got back under the 50, jumped back over it. So as you see, you're back and forth here. Kind of sucks, yeah? So we need some more filters in here to kind of help us. So while this isn't a heavily traded moving average, it's still important. That's the 100-day moving average. These are the standard colors, by the way, okay? This is the 50-day yellow and the 100-day blue moving averages. All right, so take it to another level here. This is yet another rolling support and resistance line. As you see, price reacted to this one just the same as it did the 50. When you see moving averages get bunched up like this, like they did here and here, right? And they're getting tight again here, you're going to get some crazy movements in here, so be watching for it. That's just part of moving averages doing what they do. You'll see the price drawn to those crossings and those flipping around of the moving averages. If you've ever heard me talk about what a tits cross is, that's what I'm talking about. Whenever you see moving averages cross, the price tends to go back towards them. All right. 100-day is just the same as the 50-day, only much slower. So you have much more time to sit back and think about it. All right. In fact, you rarely have to look when you're in a bull market and this thing crosses over the 100-day moving average. I'll give you an example of that now. Back here, this is the previous bull market. All right. So here we have ourselves jumping over the trend line, dances on the trend line for just a little bit, hops over that 50 and that 100 moving average. Off she goes. I actually ended up selling my XRP right up here at the top, which was awesome. And then a couple days later, a lawsuit happened and Ripple got sued. Well, it's a good thing we sold right before this happened. That's right, folks. We sold right before that happened. After that, it cut right through those moving averages again, managed later to jump back over. And then once the bull market got going, it kind of pretty much stayed over the 100 moving average the whole time. We've already talked about trend lines. You put in your trend lines there too. I'll do that now. Right there's a green trend line. That's an uptrend. As long as we're in an uptrend, you don't need to hurry up and sell anything. Maybe only sell a portion. You don't need to bail out as fast as you did before. Put those moving averages in there with it, and you get an even better picture. Even if this thing drops under this trend line a little bit here, these moving averages are down here to kind of help catch the price, help hold it up. All right. Now, if it's on the other side of that and the price is underneath the averages, look how hard it fights to get through sometimes and doesn't get through. Bangs its head on the wall, yeah, and has a hard time. So that's the 100-day moving average. Like I said, not as frequently traded or used. How about the most important moving average of all? That's the 200-day moving average. You'll see this on a ton of the charts that I sell. Why? The 200 moving average is the hardest line to break on the daily chart. And I say that because more often than not, you're going to see it bang its head on the line in either direction. All right. This is very simple, the way a 200 moving average works. If the price is over it, you're bullish. If the price is under it, you are not bullish. It's very simple. Okay. You will not, listen very carefully, you will not have a bull market until the daily price is over the 200 moving average. It won't happen. If that price, I'm moving my camera, my fault. There we go. If that price falls under there, it will take a while before it gets back over. So have a beer and relax. All right. As you see way back here in the bull market, this thing slipped under the 200 and started struggling. First fell under the 200 back here in June of 21. It did get back over, only to go sideways and fell again. Then once this thing got under the 200 this time, man, she really had a hard time, and it started to capitulate really fast. Jump back over the 200, back under, back over, back under, back over. And now you've bounced off of it right here. Very cool. Are we still over the 200? Yes. Are we over the 50-day moving average? Let me pull them up here. Yes. Are we over the 100-day moving average? Yes. So cool. We're still in a pretty good spot. When you have the price like you see right now on XRP over top of all three of those moving averages, that's considered good support. All right? Good support. Is it amazing? No, but it's good. Now, another thing to remember about the 200 moving average is it's a very strong magnet. When the price gets very, very, very far away from a 200 moving average, it's only a matter of time before it comes back and everything slows down, okay? It doesn't mean everything's going to fall in price. It could just go sideways. But that 200 moving average will eventually catch back up with the price. And over here in the bull market's another great example of that. Let me take these 50 and 100 off because you don't need them right now. All right, so I'll put the 200 back up there. This thing got really far away from the 200 moving average right here. See that? It was only a matter of time before it slows down and goes sideways and stops. And you may think, oh, that's just XRP. Whatever. Well, how about we pull up Bitcoin here and we have the same exact look. All right, here's Bitcoin all the way back. This doesn't even go back far enough. Let me pull up the index chart. There we go. That's better. I got fibs and everything else drawn on this one. Ha. All the way back to post-COVID, April 2020. It jumped over the 200 moving average, and then look at that, folks. It stayed dead over it the entire time. In fact, there was no need to sell anything on Bitcoin until it got way up here at the top. We can put that 50 back up there real quick. As soon as we fell under that 50 moving average, you could start thinking about taking some profits. That was at $59,000. Not too bad. How many here would like to have said, hey man, I sold at 60,000. And that was it. I sold at 60,000. Where did you buy? Ah, bro, you weren't around? I'll tell you when I bought. I bought at $7,000. I sold at 60,000. I 9x'd my money. Not bad. Ask any Wall Street guy what they would do if they 9x their money. They're heading to the strip club. All right. You didn't need any fancy things for this. You didn't need any fancy tools. It's just strictly moving averages. Know that when they're under them, they're resistance. And they're above them, they're support. When they're stuck in between them, that's another story. And we're going to talk about that now. All right. Let me pull up back to XRP here. There are patterns to be seen here. I'm going to take the candles away because we don't even need them for a moment. All right. I want to show you something pretty cool here. All right. So whenever you see all the moving averages bunch up together like this, 50, 100, 200, you're destined to have some crazy price action come in. I talked about this earlier. However, what you can't see right now is the candles. You don't even need to right now. But whenever you have them all bunch up like this, and you add in some other stuff, it gets even better. I'll put the 821 EMA in there. We did that on the first lesson, yeah? All of the moving averages are all balled up in a ball here, wadded up, trying to figure out what to do. As they figure it out, you'll see these moving averages fall into what we call the correct order. What is the correct order? That's right here. 8 EMA, green line. 21 EMA, purple line. 50, 100, 200 in descending order. All right. 8, 21, 50, 100, 200. Green, purple, yellow, blue, red. That's the perfect order. When you have that, she's free and clear to run until it breaks one of those lines back down. Okay? You're going to see this on many assets, not just XRP, not just crypto, not just NASDAQ, not just the S&P 500, all of them. They'll all do it. Same story here. Look at this. Way back here, you started getting the right order. I got to pull up that index again. This Bitstamp chart doesn't show all the history. So I got to go back to the index chart. All right. So way back here, what date is this? This is right about through here. They start to wad up. That's in July of 20. Right after that, perfect order. 8, 21, 50, 100, 200. It dipped down for just a second here in September, and then you got it again. 8, 21, 50, 100, 200, and off to the races she went. And as you see, that order stayed pretty damn straight until it got all the way to the top. 57,000. That's the second time you've used nothing major to tell you when to stop and when to start. Now, was there a little bit of lag in there? Yes, there was. That's why we start with the first things first, like trend identification. I'm going to find your trend first. Are you trending up? Do you have a bullish structure, right? Do you have higher highs and higher lows? If you do, excellent. That's exactly what you need to then look to some other stuff. If you don't have higher highs and higher lows, you have a downtrend, and it's not time to do anything special. Okay? That's first. After that, we can go look at our 821 EMA, check our support resistance. All look good there. Are we on top of support, or are we like way under resistance? Well, up to you to make a decision on whether it's worth the risk or not at that point. Some people like to wait on it to get back over support. Usually the smart thing to do. Safer. Some like to take a risk when things look terrible. All right? This is why I bring these things up. Now I'm going to switch to weekly. Because on weekly, they get even smoother and easier to read. Which is pretty cool, right? Everybody likes it when it's a little easier. Look back in history here at the moving averages as they've flown through and weaved themselves in and out over the years. 2020, oh sorry, this is 2012 into 2013. 2012, they all lined up perfectly. 8, 21, 50, 100, and the 200 would have been down here somewhere, but it didn't exist yet. From there, it stayed up all the way to $547. That was back in 2014. None of you had Bitcoin. I'm sure of it. After that, 2016, it happened again. 8, 21, 50, 100, 200. Perfect order. Off they went. All the way to the top. Price ended up going to like 19,000, 18, 19,000, something like that. This is weekly, so there's going to be a big lag here. But I want you to see, you're going to use the daily to buy and sell. You're not going to use the weekly, but we'll use the weekly to find the trend, okay? Sure enough, same thing happened back in 2020, right after COVID. 8, 21, 50, 100, 200. They all swept north and went great. And here we are again. And move this stuff out of the way. I can always redraw this. All right. So, are we in order? No, we're not. No, we're not. Things are all a little jumbled up here, aren't they? You've got 100, 8, 200, 21, 50. That is not the correct order at all, is it? This lets us know, hey, everybody, maybe it's not exactly time to start freaking out and panicking if we don't get the absolute perfect buy. Our moving averages kind of show us it's going to take a little bit of time here. So have a break and relax. All right. Let's put the candles back on there for a second. Look what happened. Price ran up, came down to the 200, blew through it, then came back over it, then failed it again, failed it. I got a bit of an inverse head and shoulders here, and then it pushed through the 200 moving average. Thought about sitting on top, didn't it? That one nice green candle right there. That felt good for 1 week, didn't it? One green candle and then oof, right back down. Not great. It fell under the 200. Once it fell under the 200, it rapidly fell to 21. Where's my next target going to be, everybody? Right down here. this 50 week moving average. It only moves once a week, so it takes a while. But this is slowly going to work its way up. If this goes slow, this goes slow. If the price goes fast, the moving averages go fast, all right? Now, I'm going to show you a couple cool little patterns, all right? Whenever you see moving averages pointing down and kind of pressing down on another moving average, like you see right here, price is under this 8, it's trying, and it kind of gets pinched, right? You'll see the price react, and that's exactly what happened. It got pinched. First it popped up and couldn't handle it, immediately came down and failed, right? After it failed, you think, oh, hey, we're in the clear. It's going to, nope, right back up. But this time it caught the 50-day moving average. It was way up here, and it started to pinch down. Now you've got a cross down here. You've got the 50 crossing the 100. A lot of downward pressure. You want to see upward crosses, not downward crosses, right? Now, where's our next place to catch us? Well, on the daily, it's this 200-day moving average here, which is at 23,771. If you remember, I just said that weekly was 22,000 something, 22,005, something like that. That's where the weekly is. 22,003. So in between 22,003 and 22,003 to 23,750. Somewhere around in there is going to be our spot where this thing stops and takes a breather. All right. That's if it doesn't stop and take a breather now. But this is what we use moving averages for. They give us an open view of what's coming. All right. They will hold the price up. They will stop the price from moving. I've caught a lot of grief for saying that XRP was going to stop at a certain level. I said XRP would stop at about 60 cents. Why did I say that? Well, I'll show you now, okay? Take some of this stuff off and give you a real world example of how I was able to see something and then tell everybody what I thought was going to happen. And it's happening. So this is our big bear market line. I've got that labeled in yellow, big bear downtrend. As you see, we still haven't broken that. A lot of other coins have, yeah, like Bitcoin, Ethereum, AVAX, blah, 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 whatever. They broke their lines. XRP hasn't. Furthermore, where do we see moving averages above the price on the weekly chart? Right up here at this 100-day moving average. All right, as we see, this thing is slowly sweeping down right about where I had this line drawn that said 2023 hard ceiling. Way back in December, I drew that line. Now, it just so happens that's right about where resistance is. Whenever you start seeing things line up like this, well, it's kind of a sign that things are going to happen in a certain way. If the price falls, how far will it fall? Well, the 50-week moving average is down here. It's kind of turned up. That may catch the price if we fall. But even if we fall, we're going to get stuck right here on this one, on the blue 100-day moving average. Add in the 200 that I've already taken off, but I'll put it back on there. There you go. Look at there. You tried to break the 200. You got over it for a couple weeks, fell under. Tried to break the 200, got over it for a couple weeks, fell under. Now we're getting pinched. See that? We're getting pinched. Let me pull up the 8 and 21 EMA. Looky here. Pinch is happening where the 8 and the 21 are pushing upward toward this 200 moving average. Hasn't crossed it yet. Look at that 8 and 21 failing and kind of rolling over here. Trying to get to the 200, but it hasn't done it yet. All right. This is another trademark example of things not going exactly the way you want them to just because you want them to. All right. We've already found out that you can't make things happen. They're going to do it with or without you. You've got to plan ahead and have some sort of understanding about what's happening beforehand. There's also never been a bull market when anything was underneath the weekly 200 moving average. And there it is. Price underneath the weekly 200 moving average. I don't talk bad about people, but for those who make their money off of shilling one particular asset, they're only costing you money and only hurting themselves now. Sure, could this thing be $100 in 10 years? Yeah. But in the meantime, it could lose 70% of its value and 70% of the money that you put into it. That's like you getting a $100 bill, throwing $70 away and saying, yeah, I'm buying XRP now. Well, no. Why wouldn't you just buy when the right time comes? This is why we do what we do and why we talk about what we talk about, all right? I've already talked about how they act as rolling support and resistance. I've already talked about how the 50-day moving average is used as a basic buy-sell indicator. And we'll go back to that real quick. I'm actually working on a strategy on low time frames now that I've kind of been pairing with different things. I'm going to be doing a funded Forex challenge soon. I want to show everyone what you can do when you actually apply yourself and you dig in and do it. There'll be strict rules that I follow when I do that. So I don't want anyone to get mad about it when they see me doing things like, why didn't you do this? Why didn't you do that? Right? It's not how I do it. So 50-day moving average, same situation. You jump the 50-day moving average back here. Once it jumped it, you were good all the way till it failed it again. Same thing we talked about a minute ago. Jump the moving average here. You already know that you had a big bear market line here, so you should already be prepared for that thing to hit it and fail it. And sure enough, it did. Right back to where you bought it. Stuck in the mud now. People are calling me and I can't answer. They're going to have to wait. Stuck in the mud now. Can't get free. Until this gets free, no mas. All right. I need to see this thing break this big line. Then follow my simple guidelines. Simple stay over the 50 and we're good. I'd really, really like it to be over the 200. There are no bull markets without being over the 200. And if you think, hey man, I bought the 50, where do I sell at? We can always put that 821 EMA in there. And as soon as you get that 821 downward cross, or you start getting it where it's bouncing around and failing the 8 and the 21, you're not sure what to do, well, there's a great time to think it out. Hey man, what do I got? Where are my moving averages at? How am I over the 200? Am I under the 200? Is things bunching up? Or am I going to get some volatility here soon? Am I going to see something change from now to then? Or, well, how's the big time frame look? How does the weekly look, right? People constantly say day traders don't look at the macro. Well, first and foremost, that's where I start. So how am I not looking at it, right? One of them things that frustrate me, right? But I never get too upset about it. I just go forward with it. It is what it is. So I want you guys to practice these. Take your time and learn them. For you guys that aren't members yet, there is a link here for half off. We do this constantly, and people can come in and ask all the questions they want anytime they want and be around like-minded people like me and some other guys in here right now. All right? We talk to each other about this stuff constantly. We look at stuff constantly. We check ourselves and double check ourselves constantly. It's not just me spouting off at the mouth, all right? I'm leaning on people who are smarter than me, and people are leaning on them. People are leaning on other people that are smarter than them, all right? We all come together as a collaborative effort to get smarter together, all right? That's why we do this. That's why I do what I do, all right? I could just be by myself, and I would be fine. But honestly, I realize the necessity of a hive mind. So we're not going anywhere. We're going to be here, okay? That's all there is to it. We're going to be here. Things are going to get really wild in the next couple months going into the next bull market because we are not there yet. All right? There's going to be some more down in there somewhere. Going into the next bull market, it's going to get wild. And then that bull market's going to come in and everyone's going to get super emotional and they're going to start doing things that they shouldn't, and they're going to break loose of the very same things that we're talking about right now. So please, if you don't do anything else, take the free lessons and learn, okay? You don't have to do what I do. You don't have to listen to me, but this is free. I don't want anything from you, all right? Just try a little harder, and then recognize once you try harder and you get around the right people that you're going to be massively successful. So I'll do another one of these in 2 weeks, all right? I'm going to probably do the MACD and the RSI on the next one together because they're fairly simple to explain, and I'll kind of show you some strategies that go along with those. For whatever reason, but dang Discord won't show the events tab right for me. I don't know why. And my invite link isn't there anymore. It works on mobile, but it doesn't work on desktop. I don't know. Anyway, thank y'all. I appreciate everyone coming. I'll have this uploaded to YouTube here shortly, and I'll put it over in the general chat for those who didn't see it. And spread the good word. Tell everybody, man, we want people to come learn. It isn't about me. It's about us. It's about making as much money as possible. I want to retire with every single one of you. Okay. I want us all to retire together, be in a big ass club, kick back, chill, and not have to worry about nothing. Okay. Life's too short to stress all the time. All right. Think things clearly, be smart, and I'll see you guys later. Take it easy. Live stream tonight at 11. Zoom after. Peace.